Welcome to the Teaching Tax Flow Retirement Plan Contribution Mini Lesson. And we know that one of the three laws of teaching tax flow is that tax agencies are our involuntary business partner, and certain decisions are encouraged and certain decisions are discouraged within the tax code. One of the things that's a very common tax strategy is retirement plan contributions. So in this mini lesson, we're going to talk about making sure that these retirement plan contributions, meaning you're taking money out of your income and you're putting it into a retirement plan, or you're putting it into an account that is part of a retirement plan. And we're going to talk about different types of retirement plans. And we're going to talk about pairing that with your TTF diagnosis, color-coded diagnosis, because some retirement plans have different types of benefits and attributes and that sort of stuff. So let's just dive in to our agenda. I just discussed pairing the retirement plan contribution with the proper teaching tax flow diagnosis. We're going to talk about that. We're going to talk about the common types of retirement plans. There's different types, there's different complexities, there's different contribution limits, there are different deadlines. And then we're going to wrap it all up with some calls to action. Now, remember, we learned in Teaching Tax Flow 101 that each taxpayer has at least one and typically multiple color-coded diagnoses. So obviously, if you look at these diagnoses and you see red, that you are in a high marginal tax rate, that retirement plan contribution to a pre-tax account, meaning you're getting a tax deduction today, might be more valuable than someone that is a green diagnosis that would benefit from putting money in your retirement account that you don't get a tax deduction today, but the money grows tax-free. So that's why a retirement account, depending on the type of account, has different elements. It could have a red element and a purple element with a tax deferral with purple and red with an immediate tax deduction. Or it could have a green element, meaning you're in a low marginal tax rate, so you really don't need that deduction today, purple tax deferral, and then you get a gold diagnosis. One thing I see a lot is that taxpayers in the green diagnosis mistakenly put money away pre-tax when they're in such a low marginal tax rate. So before you even start thinking about what type of retirement account to contribute to or to participate in, and you can be in a multiple, figure out what your diagnosis is. What's your current marginal tax rate? And what do you think your marginal tax rate is going to be in the future? This chart, and you might want to pause it, really lists all the common types of retirement plans. And I really sorted them by complexity, starting at the top, where you've got the traditional or Roth IRA. Now, the difference is that a traditional IRA, we're just going to talk about IRAs right now. In general, you put your money away into the traditional IRA and you get a tax deduction today or this tax year. The money grows tax deferred, so purple diagnosis, but then you pay tax on the entire distribution at whatever your tax rate is in the future. And assuming that you make a qualified distribution, you don't have to pay any type of 10% early distribution penalty. So that's really your traditional IRA. That's your basic complexity. The Roth works differently. The Roth is where you put money away. You don't get a tax deduction today, but the money grows tax deferred and actually tax free when you take it out if you have a qualified distribution. So really look at those calculators, at tax free versus tax deferral calculator within the TTF ecosystem, and figure out what your mix is going to be between that traditional and Roth type of retirement account. There are some income limitations and some phase outs with the traditional and Roth IRA. As we work down, many of these IRAs, or retirement accounts, I should say, have a Roth component. It's like a solo K has a Roth component. Typically, a safe harbor has a Roth component. But as you work down, you can see there are different complexity levels within different types of retirement accounts and different limits, different contributors. Some are individuals, some are employer only, some are a blend of employer and employee. If you're a taxpayer that has a business and has employees, you're definitely going to want to take a look at the eligibility guidelines for each type of retirement plan. You could see here in this column the employer limit. Obviously, there's no employer limit on a traditional or Roth, but there are several employer limits this is based on the 2022 tax year. We're going to update this each year and how much could be contributed to the retirement account. Final thing, very important to understand, the deadline for the contribution. Many of the retirement plan contributions could be done to the end of the year. So we call that AP, meaning post year end. But some of them have to be done in the actual tax year that we are in. So definitely take a look at this. Talk to the people on your board of directors and figure out what retirement plan or plans, you don't have to just use one, make the most sense for you. So let's wrap up this mini lesson. First thing we're going to do, review your tax return, look at that marginal tax rate calculator in Teaching Tax Flow, figure out what your diagnosis is. We know it's pretty much going to be gold, but are you red? Are you green? Are you purple? Which one? Then you want to pair that. Remember, those red diagnoses are going to be more apt to be a pre-tax, a traditional, or instead of the Roth. But pair the retirement plan contribution with your Teaching Tax Flow diagnosis. Considering pairing retirement contributions with other Teaching Tax Flow prescriptions. So what that would mean is potentially shift income in the fact pattern where you might have children working in your business and you own a business. Shift income to those children, red diagnosis, let those children contribute to a Roth IRA, green diagnosis and gold diagnosis. Finally, be aware of those contribution limits and deadlines for each type of retirement plan. Make sure you work with people on your board of directors, which is going to be your tax advisor and financial advisors, to ensure that you get the best result possible. All right, thanks for watching the retirement plan contribution mini lesson. Have a great day.
John here from Teaching Tax Flow. I wanted to thank you for watching this video. We literally have hundreds of hours of content between podcasts, webinars, videos just like this built specifically for you, the taxpayer. Whether you're a full-time employee, you're a freelancer, you're a contractor in some other sense, or you're thinking about getting into business for yourself. Everything here at Teaching Tax Flow is perfect for you, basically going off of the roadmap provided by the IRS to legally and ethically reduce the taxes paid over your lifetime. So be sure to subscribe to this channel and connect with Teaching Tax Flow, and we will see everybody very soon.